Microphone check, microphone checker. Can you hear me? Give me a thumbs up if you can hear me. Pretty please. Definitely having some tech difficulties today. Let's see if I can't get someone up here. Okay, I did get a thumbs up. Finally, that's a good sign. I just think maybe there's some kind of bad connection there. Okay, thank you, Manos. Thank you for the folks that were texting me, that were actually communicating with me. I was definitely not getting this type of engagement or seeing that we were actually talking. So that's good. That's step one, right? We'll get Michael back in here in just a moment. And I'm excited for a nice little combo with him and with you, the listener. So we are Trader Roundup Market Edition. We'll try and get someone up here quickly. I powered down and powered up and started a new space. I hope that works. There's Michael. Michael. Michael, you there?
Good morning. How are you?
Good morning, sir. Fantastic. X is undefeated.
Yeah, had to reboot a couple different times. I don't know what's going on,
For what it's
but
worth, people couldn't hear me. Pit Munch was having problems talking. I think it was overall something with the connection, just X being X. So, um, but anyway, mate, how's it going? How's your weekend? How's being pop?
it was awesome. We went out yesterday as a family, and it was just nice to hang out and see everyone together, and got a chance to hold him and play with him. And I just, I'm just excited to see what happens in the future and watching him grow up. But anyway, I want to hear how all of you are, because I'm wonderful.
Bro, the trade you took was kind of awesome. just a shocker. Not bad for an old man, right?
There you go.
Not bad for a day's work. So, if you want to hear from other folks, I happily will just bring up some speakers and just kind of see what's going on with them. I'd like to reintroduce Pit Munch to the conversation, my co-host. How you doing, Pit Munch? Working on the timing there. We'll see. We got Pippi Banks coming up. Bewar,
Am
are
I
you there?
Am I here?
Yes, you are. Yes,
Good
you are.
morning. How are you?
Okay,
Sir,
okay,
I'm
I
here.
fixed
Hi.
it. I'm
How's
sorry.
everybody?
We're doing great. We'll start with Pit Munch, and then we'll go to some of the other folks as well.
Yeah, I didn't hear what you said. I just only heard working on the timing.
Yes, I was just essentially saying hi. Thank you, for coming up and co-hosting. We're trying to get everything together.
Yeah,
Definitely
I'm
having
happy.
some
It's
X's undefeated, but being in the market during the market hours on a Monday, right? And with Michael here, it's great. I'd love to get different questions or thoughts. There's been a lot that's happened over since the last time we've convened. So there's a lot that folks could be asking about, talking about. And I think that's what we kind of want to hear, right, Michael? Just kind
Yeah,
of some feedback from folks.
just a loose conversation, everybody hanging out, and just whatever comes to mind off the cuff. That's fine.
I love it.
Yeah,
I love
that's
it.
nice. I would only like to start with a little comment. I really like the seasonal tendency lecture from today. It was straight to the point, not complicated, and just looking back at the first weeks and what should be expected, but also when it doesn't do it, explaining very clearly that then that's a sign of more bearishness. I thought it was a great video. Just dropping that little comment.
Thank you. Appreciate that. And let me just add one more caveat to that. There's a lot of things in trading, even with my stuff, that it may seem like okay if a bullish fair value gap forms and price comes down into that, then obviously the neophyte, brand new student would expect it to send price higher, not realizing there's a dependency on the premise or the bullish nature behind price supporting that PD array. It's not just simply I'm an up closed candle and I'm all by myself sitting here. I'm going to support the entirety of the market going forward. There's a lot of things that have to go together. But that when you eventually learn, there's inversion aspects to that. So if they fail to utilize their first presentation or their first utilization, in other words, if it's a buy side delivery, and it's a bullish market, then obviously we would want to see price stay in the upper half of that and not lay a body down in the lower half and then send price higher. That's the normal, reasonable expectation. But if it fails, that's not a, well, this stuff doesn't work. That's greater insight, because if it fails to support price and when you're expecting it to be bullish, it's giving you an immediate feedback for sentiment purposes that, okay, maybe this is a good short. And you either course correct or stand aside. In seasonal tendencies, it's even stronger when a seasonal tendency is not actually forming when it should. And the energies has always been a really strong seasonal tendency. If you go back and look at data prior to COVID years, you'll see what I stated was it's just a very strong, it's like really strong, almost like when we used to have egg futures, and they traded before I was a trader. But when do you think egg futures would go up in the United States, in our U.S. market? What time of the year do you think it would go up? Easter, right? Because everybody's hard boiling eggs and whatnot. And roasters used to be a commodity. And when it would go up around the holidays, Thanksgiving and Christmas. So nobody would want to buy them all up until that time of year. And it became such a strong seasonal tendency, nobody had volume or interest in trading it until it got to those times. So they just did away with them. So seasonal tendencies, in short, are wonderful tools. They're not panaceas. They're not be all end all. But when they don't materialize, they are very much indicating that the opposite is most likely going to unfold. So your probability shoot from, it could go up if my technicals are agreeing with the seasonal tendency being bullish. But if it's not going up, now we jump to 85% probability that it's going the opposite direction. And that's just a real wonderful, benefit to knowing what should happen. And when it doesn't, don't get frustrated and say, oh, I'm giving up on this stuff. It's telling you something else. You got to turn it upside down and go the other direction. So
And when
anyway,
we and when we stack probabilities, Michael, right? It can actually really work to our favor when, for example, it was weak at the 0.382, right? And then that was very clear that it didn't want to have the body close, the order flow wasn't there. So it meant that there was an even further probability that it was going to do the opposite, right? Or do what you would anticipate.
are you referring to the trade I just did in
Yes, yes,
short?
I'm referring to the trades you took, the order flow and the octants, and where order flow did not choose to breach and close above. That's a big tell for you, right? I mean, for all of us, but for any trader, as much as we want to see the probability of something happening when it doesn't happen, if there is a probability to that occurring, then as you're saying, it flips on its head. So if
Yes.
it's that gets even stronger for the trader when they know what they're looking for.
Mm-hmm. Knowing what you're looking for, and then the characteristics upon which it either supports price going in your favor or if it negates it. There's not enough work done in that. In
I lost you, Michael.
Yeah, I can't hear me either.
Yeah, yeah, Michael, we lost you, buddy. Uh-oh. Is X just really being that difficult today?
Yeah, it is.
Michael's probably talking and he can't tell that we can't hear him. And he's talking to some kind of muted mic or something.
I'm gonna post a comment. I hope he sees it.
X is trying to disrupt our flow here.
Yeah, X doesn't want us to have the sauce.
Well, he realized that we couldn't hear him, so he left in. He's coming back. Here we go. My girl Candace came up too. We'll see if I just sent you a speaker tag, Michael. I mean, we don't know what the issue is.
Hey, Candice.
No, it was really nice having Candace on the other day.
Yeah,
So
cool that she's up.
I've got a couple speaker tags out to Michael. See if we can get the combo back going here. It didn't. Hold on. No, he doesn't have one. That's crazy. I just sent it to him 3 times and it's not showing that well, maybe he disappeared. Maybe that's why. He's doing the power down, power up situation.
Yeah, he said he had to do it a couple of times, so I guess he's doing that again.
X is undefeated. That's all I can say. Keep an eye out for Michael. We'll and if you see give him the speaker tag if you see him hit much.
Yeah.
So I'm looking here too. We'll patiently wait, see what happens. More than likely, it's a power down, power up scenario with your phone. That's typically what happens. We'll skip around real quick to another speaker as we wait here. Pippy B, how you doing, bro? Bawar?
Hi, how's everybody?
Pretty good. We'd be better if X wasn't so undefeated, but we're here
Yeah,
doing it to it.
trying to keep us away from, talking the good shit, actually.
Yeah, no doubt. How you doing, man? Did
I'm
you get a
doing,
chance to watch the lecture series this morning or the lecture last week or anything
I didn't
of late?
because I just got off work an hour
No,
ago and
that's
I
okay.
had to rush my way back home so I can trade. So, but I could see the notes that he was sharing on X, and that was pretty helpful, to be honest.
Very nice. Very nice.
Yeah, and actually, I wanted to say something if Michael could be here because last time we talked, we were talking about me jumping off from one model to another, and he gave me some advice. So,
Yeah, bro, I don't know what to tell you. I can't even see Michael in my feed right now. There he is. There he is.
Yeah, I
yeah,
Back.
sent him the tag.
Okay, there he is. I was looking for him. I couldn't see him. I just
Yeah, I
happened to.
found him.
You sent him the tag.
Yeah, I already did, but he
Yeah,
didn't
I
get
saw
back.
you sent him the tag. We heard almost nothing. I knew you were something got cut off, and yeah, like you started
Yeah,
talking and it instantly dropped.
You were
I
talking
think
about
there's.
the eggs and Christmas, so
Oh man, I
around
went
there.
on and on and on.
Oh,
I know, and I even said I was like, I bet you he's having a conversation right now with
yeah.
himself, and he can't realize we can't hear him.
It
Yeah,
cut off around there.
yeah.
Eggs
I
and
think they're
Christmas.
screwing with me. They're messing with the audio and video link on YouTube. I'm having issues sometimes uploading with that stuff, and when I put things together for X in short little videos, it goes right to the point where it says it's usually ready to post, but it doesn't complete it. It just sits there and lingers. So I think it's pretty obvious that they're trying to send messages like, look, you need to shut the fuck up. You're giving too much stuff. But I already told you, I'm not shutting the fuck up.
Yeah,
So
that was
I'll
the
find other ways of doing it.
gremlin comment.
Yeah. Anyway, what I was saying was, is if in very short, succinct manner, seasonal tendencies, wonderful, great, but not just in seasonal tendencies, but understanding that I don't think there's enough done in the industry where educators, because I don't think they know it really, they teach this idea of go, go, go. I mean, think about the expression, let's fucking go. Let's get out there and let's go. Let's go. Okay, that's great. I appreciate the enthusiasm. But once we're out here and we're in the deep waters, what happens when we don't see things going our way? We get caught in the riptide. We get, you know, we're met with, we see fins circling us. It doesn't sound like it's all that fun anymore. What do? You have to have protocols and processes. And by having these things determine a outlook on price action, a PD array, a seasonal tendency, a time of day, if things in your model say this is what price should do, and you subscribe to that view, if it doesn't pan out or it starts showing signs that it's not doing what you thought it was going to do, you have to have some kind of management process for yourself. Because the worst thing you can do is get wrapped up in the emotion and start praying, oh, market gods, help me turn this around. Please don't let me get stopped again. Let me get my combine pass. Let me get my payout. None of that stuff's going to work. I promise you, there is no God out there that's listening to you and say, okay, well, I'm going to stretch the candle just for you today. I'm not going to hit your stop loss today. Okay. You have to manage your positions. You have to do those things. And you have to recognize that the telltale signs that what you believed when you got into the trade, and maybe it looked like it was there for a little while, if it's changed, if it's shifted out of favor for you, you need to be able to recognize that. And I can tell you that that is not a skill set that's easily and quickly learned. You have to be in this industry, in this game, doing it a long period of time before you acquire that. No one can transfer that information to you. You can't go through a 5-minute trainer mentorship. Nobody out there, I don't care how much money they show you in broker statements, they're never going to be able to transpose that information and experience into you. That's the expensive part about trading, the experience. It costs you time. And some of us is going to spend, a lot more time than others. And then you can be mad about that and think it's cruel. It's not fair. Why do I got to spend more time learning all this stuff? Because it's you. You're in the way. You don't realize you're doing it until you get there and you're successful. You look back. You know what? If I was being honest, I really was expecting too much too soon. And I didn't have all the experience because that's what happened with me. And the painful lessons, I finally woke up and said, you know what? What do I keep doing wrong? And what am I pushing through into these danger areas where I'm wrecking myself? What are those things that keep reoccurring? And it's how I was thinking, what I was doing about the trade idea not running in my favor, or showing signs that it's really not likely to do what I thought it was going to do. It's just petering around and staying inside this small little consolidation. Do I bail? Do I cut bait entirely and reverse? Do I take half the position off? Do I take something off? Do I add? And all these things, began to build and give me processes and protocols that I think that more educators should do in their teaching. But I think it's because they don't have the experience being consistent to recognize when inconsistency is now showing itself in the model in the present market conditions. And what do you do then? So anyway, can you hear me? Or did it say anything
Yeah,
else
no,
out?
we can totally hear you. I love how you're like, wait a
Mm-hmm.
second. Did this cut me out again? No, it did not. We
Yeah.
can hear you perfectly fine. This was an actual coherent paragraph thought that you actually got off here. And it's the first one in a minute. So, yeah.
I was close as I possibly could get back to what I said when I thought you were hearing me the first time. So I missed a couple things like the lottery numbers this coming week. I didn't mention them again, but we'll have to just keep going through. We only have a little bit of time today.
I love how I totally get your dad jokes, and that probably went over like a lot of folks' heads. So anyway, we
As
have
long as I'm
Bilwar.
amusing myself, I'm okay. I got to
Yeah,
entertain
no
myself.
doubt, no doubt. I'm with you on that one. Bilwar was here last time, and he has a question. I'm going to bring up folks one at a time. We're going to have just a nice, casual conversation. Lots of folks here, lots of folks to have conversations with. Bilwar, we're following up with you first, brother.
Hi, how are you? So first, I want to introduce myself. My name is Biawar. I'm from Kurdistan, Iraq. I've been trading for 1.5 years, only less than 1 year experience with Mr. Michael models. And last time we talked together, he told me that I shouldn't go jump off from one model to another because I was doing that. And I had a really bad experience with the overall learning with him. But ever since he gave me that advice, I think it was a month ago, he told me that. He said, just focus on one model. And I've been focusing on the regular trading hour, I mean, the first presentation. So basically, the first hour of the opening range gap. And I've been practicing with paper trading, and it's going pretty great, actually. So that's all I wanted to say, actually.
What observations did you recognize in the change from jumping around and playing musical chairs with different approaches and models to that one model you're sticking with? What type of epiphanies did you discover by doing that?
So I recognize that for a trader who's less experienced, who doesn't have a lot of experience, actually less than a year experience, it would be just suiciding yourself to, trade every time of the market. So I was trading PM session, lunch macro, the morning. I was trading London sometimes, which really got me confused because I didn't know what the market is doing one at a time, learning and focusing on one time and one price action at a time. So I actually learned a lot of things. Right now, I'm still practicing. I want to give it another month with paper trading and then go and give it a try with real money.
Okay, so you got a model.
Yes, sir. Yeah.
Well, I'm glad to hear that you actually used the advice I was giving in regards to not jumping around. I know because I have lots of things out there. And if I was like running a yard sale, like I'd have the biggest yard sale in the neighborhood because I have so many things that I can get your attention and say, look at this. We want to buy this. You want to buy this. So you always think that, okay, he's held out the best for last. And anything new comes up, you're like, well, let me just push this aside. Let me find out what he's doing over here because this might save me more time. But really, what you end up doing is creating more time learning, and you diluted all the time you invested in one model, which is what you're all supposed to be doing first. Just pick one. There's no one better than the other. But you have to start somewhere because if you don't have a baseline, as you just discovered, by having one, you realize that you were in your own way, and you keep trying to, seek new information when one model, one approach is all you need. Simplify everything. Everything can be simplified to simple things as staging. Are you bullish or bearish? When are you going to trade? That's the time of the session. You're going to be a PM session, AM session, London trader, Asian trader, whatever it is, whatever that is, that's all you do. It doesn't mean that's all you'll do forever. This means right now, because I'm starting, this is what I have to stick to. And don't let the other volatility of other sessions, my trade examples, my students' trade examples, whatever they're doing, just use it as inspiration, but don't look at it as comparison. I'm not doing enough because look what they did. Because you're going to have something that you do, because there's some of us that are listening to us right now talk, and they heard you say that you corrected yourself. You had course correction. I told you don't jump around different models, pick one. And now you're coming back with a testimony saying you've seen progress from that. It's helped you. There are people that haven't done what you did. They still want to jump around. And now they're thinking, see, this guy did that. And I've been waiting around, waiting for something better to come along and dabbling with this one and dabbling with that one. And he did something I knew I should have been doing, but I haven't done it. And now I feel jealous. I'm envious because he's got further along in his progress. I promise you, there's people listening right now. And they're uncomfortable because if they were going to come up, they're not going to come up now because they're thinking, I don't want to say anything now because he just pegged me. But that's what you have to do. You have to say, you know what? This is good medicine. I'm going to listen to the old man. There's enough people out there proving it works. I'm just going to put it to the test and stick to the rules. And either it does or it doesn't. And if you stick with it, it will. But you have to condition yourself. And if it isn't easy in the beginning, is it?
No, actually, it's not easy. It's really complicated to just overcome your feelings and stick to one model only. Because for an unexperienced trader, you just want to jump around and try everything. And then at the end of the day, if you try to get everything at a time, you're not gonna get any of it. You just gotta focus on one thing.
It's exactly correctly said. The more you try to get, the more likely you'll get nothing.
And that goes back to the conversation of self-control, right? When we look at self-control, that's the very, very first nascent stage of self-control, of having discipline. And so many folks overlook that requirement in engaging with the market. Not being disciplined, not being sober, doing whatever you want, thinking that the rules don't apply to you. I mean, we as traders love cutting corners and we love thinking that the rules don't apply to us. But having a mentor, having an actual guideline, a specification, a process, or a procedure, this is how you do it. If you want to be successful, if you want to make it less difficult and you want to learn faster, this is the only way. And it doesn't mean it will be fast. It will just mean that it's the most efficient way of learning. Only one model, one time frame, 10,000 kicks one time. Wait, yeah, one model, practice 10,000 times.
The common misunderstanding is they think that if they use a model, like if I lay three models out there, just we'll use Silver Bullet, model 2022, and I don't know, give me something else quickly.
OTE.
Okay. If I say, okay, look, here's your choice. You got to pick one. And then you sit down and say, I'm going to go with Silver Bullet. Okay, well, right now, if you don't know what that is, it's a very simplistic little approach to get a pool in liquidity that you use as a draw. It's the first presented fair value gap after 10 o'clock. and you simply trade that. When it hits the liquidity, you're done. You stop. You don't care what anybody else is doing in the PM session. You don't care what they did in London. You don't care what they did with the opening range. You don't care about any of that. This is all you do. When they see trades like I did this morning, they'll say, that's what I want to do. I want to trade like that guy. I want to trade like that student. I want to trade that guy over here who's not even doing ICT concepts because look what he showed today. And that is a terrible thing to do while you're trying to be a trader. You can do other things outside my concepts. Okay, you can make money outside my concepts. That's never been a talking point where I've stood on a soapbox and said nobody else makes money except for my stuff. I've never said that, but I will tell you how to make your stuff better if you're not using what I'm teaching. If you use the context and framework and why price should go where it's going to go using what I teach on how to read price action and filter your trade doing other things, I promise you your win rate average will go up and your losing will reduce and you'll have a better clarity on what it is you're doing. But in speaking in the community, if you look at these three models and you say, I'm going to use just the silver bullet, what happens is you're comparing what you're doing to everyone else. Like we're in a classroom setting and you all had the same test given to you, the same questions given to you, and the same multiple choice answers to choose from. And you look at your results and you base and weigh that in relationship to other people that are sharing their stuff publicly. Now, it's human nature to do these things, but it's counterintuitive and not productive as a trader to do those very things. Because what you're having to do in the beginning is you have to reduce the stimuli in the beginning. You have to bring it down to such a low input that you can't let anybody else's opinion, even mine, you can't let anyone influence you in what you're looking and observing. Because if you have any insight or inspiration by someone else while working with this one model in the beginning, what you're doing is you're allowing confusion, you're allowing distraction, and you're not building discipline, focus, and independent thinking. And these are that's the core reasons why you're supposed to be doing this, because one model limits your focus, and that's not it's not a weakness. It's not building less strengths as a trader, because you have to get a baseline on what it is that are triggers for you. What makes you feel greedy? What makes you feel impulsive? What makes you fearful? What causes you to doubt? What causes you to feel excited? You're only going to get that if you're doing the same thing over and over and over again. Now, here's the part where it's the misnomer. When people look at all the models and all the things I use and when I can make available to everyone that fits their personality, not all things fit everyone. But by starting with one thing, what you end up doing is you get a baseline in reading price action. You get a feel for immediate rebalance. Oh, I don't really trade that as an entry mechanism, but I like to see it when it happens and I'm in a trade because it builds my confidence. Exactly, perfectly used, and it's exactly how you're supposed to be viewing it. I don't really trade the silver bullet, but I'm expecting that thing to form here. I'm already short. It's likely to go down here into yesterday's PM session low where the sell side's sitting there. But this is forming. I know some of these other guys trade that, but I want to see it work for them and it supports my idea because I'm already short before this formed. You're not on the internet saying, ha, you silver bullet traders, you're getting in late. Look at me, bro. That's not what you're doing. But you're looking at things as support structure, supporting the idea that you're already in something and reading price action visually with the open, high, low, close aspect of simply using a candlestick, and then waiting for price to gravitate towards a specific pool of liquidity or an inefficiency that you're aiming for. And by doing one model, you don't realize you're getting all this information and experience because you think, I'm only doing this, but there's all these other things I could be making money on. Or you look in hindsight and say, look at this. This is a model 2022. And I chose silver bullet. Ugh, that's it. I'm bailing on this. I'm going to go to model 2022. I did that same stuff, man. That's what I've messed around for 2.5 years. I had it figured out. But I kept tinkering with this and jumping from this and saying, well, this is better than that one. I was looking for the best of the best, not realizing my ability to read price action was the best. And I don't need a model. And that's what you'll find in time. Give yourself time to cure as a trader. You may not use a very specific model right now, but by sticking to one and learning how to read price action and just become familiar with the PD arrays, the models, you will recognize them because you know how to read price action. And you'll say, oh, there's that thing that everybody else is using. I don't trade it, but I can see it. So I now feel even stronger about the idea because there's another model speaking in the same direction I'm trading in. That's the epiphany I'm looking for when I'm asking traders to say, what do you see? What do you feel? What do you discover? Well, I start with this one simple model, but now look at this. I'm able to see this and this and this and this. And I never cared about those order blocks. I never cared about those inversion fair value gaps. But man alive, here they are. It's just jumping off the chart. It makes sense to me now. Now you understand the language. You understand it. And those charts are going to talk way more outside the spectrum of just simply your model's rules. And that's how you know you've achieved the clarity and the visibility as a smart money independent thinking trader.
Michael, would you agree? What you're saying to me, and I love what you're saying, is as the growth and evolution, more models add confluence, right? We refer to it as a confluence. And for the newer trader, they're just trading one single model, and they've only got this one very specific way in which they're engaging with price. But as we learn these concepts, then price kind of opens up, and you're like, oh my goodness, I see a 2022. Oh my goodness, I see this inversion fair value gap. Oh my goodness, we're at this first presentation. Oh my goodness, we're at this octant. Like, you can start taking more of the models that you become familiar with and stack them as confluences.
It gives you a depth of perception and understanding. And if I could just borrow the analogy I used the last time we got together here like this. If I had you stare and study at a picture for a week, you had to spend 30 minutes studying, looking at it. Kind of like, these snobs, they go to art galleries and they sit there and they look at the painting. I never understood it, okay? But I'm going to borrow the logic here. You stare at this picture I gave you. You got to spend 30 minutes a day staring at it. Look at every facet and every little detail. You're not trying to decipher anything. You're just trying to get familiar with looking at it, okay? Say it's a picture of your spouse or your firstborn. Just use that just for a visual right now, okay? You know this person. You care about this person. You have an affinity for this person. There's emotions behind it. You have hopes and dreams for this person. You don't want anything bad to happen to this person. That's exactly what you're supposed to have for your model. Now, if I give you that picture and I just took a piece out of it in the shape of a jigsaw puzzle piece, but I give you the rest of the picture, are you going to lose visibility or clarity? No. Now reverse it. You're starting off with one jigsaw puzzle piece, but you know it intimately. You know it intimately. You know what the picture is supposed to look like. And I give you a puzzle piece from another puzzle. How quickly you're going to recognize that this doesn't fit here? Real quick, you're going to notice it. But you won't have that perception the first time you sit down with that picture of a stranger. And you're always in this stranger paradigm when you're jumping from model to model to model. Because you think all pieces fit together. They don't. All pieces are the same. They're not. So when you have a understanding of what the grand scheme or the picture should look like, and you're introduced with a piece of information that isn't part of that, in this sense, it would be the model that you're trying to trade with, you won't spend time wrestling with this piece to try to find out where it fits because you recognize the colors aren't even part of the grand picture. It's a small little piece of something alien to it. And you create that same problem, and you have to stay out of that problem entirely by this being in what you recognize. So how do you use this for modeling? You write down a very simple list of processes and rules and things that you are going to worry about only for your model. What are you going to use for the liquidity? Because the liquidity that forms every single day for your model is the same liquidity every single day. What? Yep. Are you going to trade previous days highs, buy side, or previous days lows for sell side? Are you going to use overnight session buy side or sell side? There's two right there. Which one are you going to use? The probability is where are we at closest to it at 9:30? At 7 o'clock, which one are we closest to? You see how easy we just stripped down all that confusion about looking at these charts. And you're thinking, man, where's it going to go? I don't know what it's going to do. Why is he going to pick this low? Why'd you pick that low, ICT? Why didn't he do this one? Why? Because this is what I'm aiming for. This is the model I'm using right now. This is what the market's telling me right now. Because I've been in here long enough to recognize that the 17 other different models I'm aware of, they're not firing right now. They're not saying something's going to happen right now. But my experience level says this is what's firing right now. So my eyes jump onto that. And that's what you end up becoming. And that may not be your goal right now. You may never even realize that's what's going to happen to you or even aimed for it. But by sticking to one model, you build a greater appreciation for price action. And you can read it and not demand that you put yourself in a trade every single time you're watching and reading it. And then you have mastery over yourself. You're not mastering the market, but you have mastery of yourself. And when you have a model that you only employ when everything's lined up for that, and you have mastered yourself, you wrestled and submitted the fear and greed aspects of trading, and that's an ongoing process. But in the beginning, you want to make a lot of money real fast, and you're afraid to lose money. And you have to figure out what those things are that trigger that. And you're only going to find that by sticking to one process, one model, and logging that and recording the uncomfortable things that you pretend that are not important. You got to tell yourself in the journal, I'm recognizing these are periods where I get really anxious. And this is an area where I can work on overcoming this fear because it's highlighting a deficiency in understanding and experience. And so I'm going to pour my attention into this, not pretend it's not there, not pretend that it isn't there and it's somebody else's problem to worry about. And as long as I don't make it public, nobody can judge me on it. No, in trading, you got to be 100% responsible. And you got to be able to recognize these things and say, you know what? If I'm going to be honest about this and make a real good, strong, honest effort on learning how to do this, I got to be honest with myself and recognize where I'm not doing as well as I would like to be. And that's what makes this hard, folks. It makes it very difficult because you think by choosing a different model, you escape those uncomfortable observations and discoveries about yourself. But they're going to be manifesting again in another model. And you may discover something else about yourself that you don't like. And you'll have to fix that. And it's a constant refinement until you no longer worry about those things because you've replaced those fearful, emotional, psychological tug of wars with, I ain't got time to worry about all that because this is what the rules say I'm supposed to do. This is the time I'm supposed to engage. And this is the liquidity I'm aiming for. Everything else is extra. I ain't got time for it. Simple as that. And when you subscribe to that one model approach in the beginning, you grow closer and closer and closer to not just simply trading with one model, but being able to read price action in a whole grand scheme that you can't really appreciate. I can't articulate it. I can't put it in words what it feels like when you look at price action. And I got dozens of models that pop up and then others are saying, no, I can't use this one because it's not doing it. Because it's like handing you a jigsaw puzzle piece to a puzzle completed that you've never seen before. You wouldn't know where the puzzle piece fits. So there's this barrier, and that's what makes it hard for me with this language because you think it should be A, B, C, 1, 2, 3, and it's easy to follow that, and it's not. But it gets like that if you keep doing it over and over again with one approach because you're forcing yourself into reading price action, and you start seeing things there. And you're like, oh, yeah, I remember him saying that. Oh, I remember that. Or you'll get to a point where you're watching price action, and it looks like, oh, this is one of those things that's going to be an inversion fair value gap. But it doesn't produce an inversion fair value gap. It just trades right on through it. Well, that's intel too. That's telling you it's extremely bullish or extremely bearish. And you get to see real live examples of that as a bonus on top of you following your model. It's all part of the experience. But in the beginning, you think because I have 1,000 videos on there and different concepts all the time, you think you got to go to the kitchen sink approach and grab everything. You got to get every piece of silverware and put it next to your plate. And that's the only way you're going to have dinner tonight. That's not how it works. You just need something to eat with, a clean plate, and something to sustain yourself. Sustenance to support you in your progress going forward. And if you think like that, it will make it so much more pleasurable and relaxing, and you'll actually enjoy the process versus, man, this sucks. This is too much shit. This guy's always bringing new stuff, He's trying to make me a perpetual student. No, I'm not. No, I'm not. I'm trying to tell you this is what's available for you. But we always go back to one model in the beginning. Whatever it is that you choose, that's it. Until you can read price action well. When that's done, then you can branch off into other things. But until you figured out how to read price action, stop reaching for a different cookie cutter.
Wow. Thank you, sir. That was correct, 100%.
Thank you for that.
It's good to hear Bawar is on board with your teaching, Michael. Pippi Banks. I don't want to continue interjecting. I'd love to have other folks jump in here. Pippi Banks, if you want to jump in, it's phenomenal, the conversation here. I know you're busy. If you wanted to,
No, I'm here. What's good?
what's good, buddy?
How we doing? All right.
Fantastic.
I got a question from Michael. Okay. So I've been like reviewing a lot of old videos, and there's times where like you'll be explaining an order block, right? And you'll say that nobody knows what an order block is, right? And you've said that numerous times, right? Could you kind of clarify on that? Like, what are we missing from, that statement for you to actually say that?
I've answered this before, and actually I did it in mentorship too, behind the paywall, and I did it in public as well. Do me a favor, Pippi. Can you put your thing on mute? There you go. Thank you. It's real hard for me to concentrate. I'm short attention span. I'm on a short bus today. So we have the change in the state of delivery. We'll just, for the sake of saying, we expect the price to go higher. Okay. The context is we opened with small gap. We traded down, filled the gap, regular trading hours, opening range gap. And we're looking at London relative equal highs, something between 3 o'clock in the morning and 4:30 a.m. Eastern time. So we think the draw is up there. The market rallies a little bit, creates a nice little bullish run up, and then it creates a down close candle in that price run. We haven't even traded half of the range that's supposed to trade to get to those overnight highs. So we're still in a discount. The down close candle that just forms, that opening price now is a trigger. I call a change in the state of delivery. If price goes through it, it does not need to close above it. It just needs to go through it. That validates that price. The range is going to be defined by, at the worst case, the entirety of the down close candle. But do we want to use the entirety of the down close candle as I've been teaching order flow? No, we don't. We want to focus in the upper half of it because that's going to show discount sensitivity. When I gave it the term order block, okay, everybody out there that hears order flow, level 2 data, footprint, all this stuff, they think that I'm borrowing their logic because I used the word order. It has nothing to do with orders. It has nothing. It doesn't. I've never said there has to be a certain size of orders. There has to be a comparison of this many orders around this price. It has nothing to do with it. I've never mentioned that. That's never there because the algorithm doesn't care about the contracts that are exchanging there. Because what it's doing is it's changing its delivery mechanism to go higher, in this case, or lower based on that opening price. Because what it's done is it's changing its state from I'm not going to go lower, I'm not going to go sideways. I'm now going to begin my price run to premium. In this case, as I outlined, looking for relative equal highs that form between 3 o'clock and 4:30 a.m. Eastern time, hypothetically. So when I was saying that nobody knows what they're talking about and they don't know what an order block is, in my mind, I'm targeting people, level 2 data, footprint traders, and they think, just like they think a fair value gap is, it's just a single print, bro. It's been around forever. Get the fuck out, you have no idea what you're talking about. You have no idea. Trade every single lowest volume node and see what happens to you. Your ass is going to get handed to you. But I know every fucking fair value gap that's going to work. I know every single one of them. I know which one's going to be inversion before they form too. So we're on different planes of existence here. So when I said no one knows what an order block is, what I was doing is I was thumbing my nose at people when they watch me or they listen to me and they think this guy's rebranded everything. when I haven't rebranded shit. I trailblazed it. This is it. This is the first print, first edition coming out right here. Nothing like it. So the comment was nobody in retail that thinks they understand what an order block is. They don't know what an order block is. But all my students know what it is. It's the change in the state of delivery at the opening price. That is your trigger. It needs just simply trade through it. It does not need to close above it. It does not have to be an engulfing candle. That's why I fucking laugh at these clowns when they do that too. Oh, it's got to engulf. No, it doesn't. No, it fucking doesn't. I've never said that. I've never said that. And every time I see students of mine even say that shit, it pisses me off. It's like, where did you get that from? Where did you just reach for that? Because I never said that. It never has ever come in there and said that. It's me teaching you one specific price. It's not a fucking zone. It's not a little piece of this and a little piece of that and rename it. No, it's one particular price action at a very specific moment. It's an opening price. It can't change. It's not a range. It's not a zone. It's not a specific order number. It's not how many people bought or sold around it. It's not the amount of trades that was around that level. It's just simply the opening price on a down close candle. When we're bullish, if it trades through that, now we have activated, because most people don't want to believe there's an algorithm. They think, oh, the buyers overcome, because what that really was a demand zone. Okay, all you demand zone and supply zone traders out there, they're going to hear this. I'm laying down the gauntlet. Let's go trade for trade every fucking day for 30 fucking days. And I guarantee you, I will lap your bitch ass on live stream and your fucking zones won't even keep up with. I'll go with no losses, not a fucking loss. That's where we're at with this, okay? I'm so sick and tired of these armchair quarterback little bullshit artists that literally are so ass hurt because I'm out here doing this, making millionaires. I'm not even charging any money, and they're panhandling, trying to get a little bit of money. $400 a month, baby. Join my Discord. The fuck out of here. Get out of here. How many millionaires have you made with your $400 a month fucking Discord? How many millionaires have you fucking made with your Telegram channels? How many fucking millionaires have you fucking made at all? At all. That's where the energy came from. It was me talking to that audience. They're not here to learn. They're here to detract, to garner attention. So that's where that came from. But my students know what an order block is.
Okay, so it was specifically for not your students. Okay, just that was a good clarification, because I always wondered that. I'm like, why is he saying that we don't know what an order block is if he's actually teaching us what an order block is? Like, what is he leaving out? Like that was always like a question for me, but that was a good clarification. Thank you.
Glad I was helpful. No problem, man.
Excellent. We're here, 11:45, Trader Roundup, kicking it, having some fun, getting fired up here in the market, feeling good. Market's open. I like the time, and interested in bringing up some more folks. Smurf, I haven't heard from you in a minute, buddy. We'll bring up maybe some new folks. Pit Munch, do we have the mic gate open by chance? Just curious, maybe? Yes, no? If we did, maybe you could review.
I'm reviewing. Let's just say it's almost open.
Okay, that's good. Cool. Smurf, you're up next, bro.
What's going on, Kip? How's everybody doing?
We're doing great, brother.
So I just had a question for Michael about the order blocks.
What's an order
So my
block?
question is, huh?
What's an order block?
No. I wanted to ask you about the first presented order block, right? Because I pretty much, that's what I trade as an entry mechanism, is the order block. So what I look for is like a higher time frame PD array to like let's take today. I believe we rejected off a daily volume imbalance at about 950, right? So to me, that was my daily objective, and I was looking for a reversal there to take out like the minor sell sides. And what I usually look for is like a purge above a swing high and a shift below a swing low, and then come back to that order block, which is kind of like the 22 model. Those order blocks that do that at like those type of higher time frame areas, would you consider those the first presented order block, and like the order blocks that will, how can I say this, provide the best entry versus
Okay.
just some random down
When
close
you
candle?
when you refer to first presentation,
Hmm.
that right there, that initial invocation of first presented, that denotes a specific element to time. So when you say that, my mind is okay. I'm listening for you to tell me where you're telling me you're limiting your focus. Like for instance, we can look at 9:30 to 10:30, first hours range. Okay, so that first hours dealing range, all that price action. Where's the first down close candle that would be, as I just gave a very colorful example of describing what an order block is versus the retail perspective of an order block. Using those rules and that idea between 9:30 and 10:30, if we see a fair value gap, a bullish order block form, and it's validated as it was just indicated how it's done, that's the first presented one. There's
Okay.
no requirement of an outside the time frame that you're looking at it. An order block is going to be the order block on the time frame you're looking at on your chart. So to kind of like keep it simple, if you were looking at a 1 minute chart,
Hmm.
look at this morning. What's the first down close candle that formed on a 1 minute chart for NQ?
In between what time you're referring to?
I just gave you the
New
example. We're
York
going to look
Open.
at 9:30 to 10:30 at first hours range. So at 9:30, start walking forward to the right of the chart. And where's the first down close candle? Well, tell me what that time is.
First, 9:27. Is
It's
that
got to
what
be
you're?
after. No, it's got to be after 9:30. Remember, we're framing time.
Okay.
No, so the first presentation means that you're now blocking off everything outside of a very specific window of time.
Got you.
So 9:30 starts us and
Mhm.
10:30 ends us. So our focus in our whole entire universe for using this example here is just 60 minutes. So looking at 9:30, moving to the right one candle at a time, tell me the time the first down close candle forms on a 1 minute chart.
What is that? 9:30.
I don't know. I'm not looking at the chart, but
9:35. That's what I see.
does that sound
Yes,
right, Kit?
yes, yes. That
Okay.
is correct.
All right. So we opened up with I'm certain this part's real because I outlined it before we got into the market. I wanted to see price draw down today. We're going to
Mm.
open up with a premium gap. So that means we're likely to go lower. We have a built-in advantage that we're probably going to go lower. So if that first down close candle forms at what time again?
9:35.
9:35. Do we see price after that candle closes? Was there any movement at all, wick or body? I don't care. Did it go above its opening price?
I
Tell me the
believe
tell me
so.
the tell me the time the candle formed as a down close candle, the first one after 9:30.
9:35.
Okay. At 9:36, 9:37, 9:38, 9:39, any of those candles, or maybe later,
Mm.
did it go higher than the 9:35's opening price?
Yes.
What time and what candle?
I want to say, what is that? 9:42.
So it dropped after creating that down close candle. It just
Hmm.
dropped straight from there.
No, it dropped a little bit lower and then it went up.
Kit,
Yeah, 9:45 is the one is the apex that he's referring to. 9:45 is the time.
Okay, so I might have asked the question incorrectly, but I thought
give me a
the.
second. Give me a
Go
second.
ahead.
Give me a
Mm,
second. I gotta pull this up on my phone. I gotta make sure. Hold on one second.
mm.
1 minute chart NQ this morning on September delivery contract for 2026 NASDAQ futures mini contract, not micro. 935 is the first down close candle after 930 opening. The very next candle at 936, it trades above the opening price of 935's candle. You see that?
Following.
Okay. Now, if we're bearish because we're opening with a large gap, it's a premium gap. That means there's a gap below us in regular trading hours now. So regular trading hours is going to want to trade down there. So we wait for price to give us some indication that it's likely to go down. If your model is going to be using first presented order blocks, and there's nothing wrong with that, that's a valid.
You there, Michael? Did we lose him?
I lost him.
Michael, I think I heard it like went out somehow.
Yeah.
I wish there was a way to jump up and down.
Or lost signal, something sound like that.
Here, everyone put the thumb down so he can see it. Everyone put
Can
your
you hear
thumb
me?
down. Yes, now we can. Now we
Hello,
can.
can you hear
Now
me?
we can. Yes, we can hear you, buddy. Yes.
Can you hear me now?
Yes.
Yeah.
Yes, sir.
No one say anything. I can't hear anybody.
I can hear you.
We
We can
can
hear
hear
you.
you.
Yep, we can hear you. Yep.
Thumbs up.
Thumbs up, everybody. Thumbs up, everybody. He's looking. Thumbs up, everybody. Come on. I need to see more thumbs up. Let's go. We can hear you. Hopefully he sees it. It sounded like he got a call or something because he was right in the middle of talking. He might have got like a text or
Can you hear
something.
me?
Yes, sir.
Yes.
Yes. Yes, we
Can you hear me
can.
now?
Yes, we can.
100.
I'm tagging in a comment. Hope
Yeah,
he
I
sees
don't
it.
think he can hear us. That's the
Yeah.
thing. He's got to.
All right,
He's got
listen.
to. Yeah. Go ahead.
There's a huge delay from what I'm saying, and the speaker microphone down there is saying to request it.
Power down and power up, brother.
I can hear what you're saying.
Okay, just leave the space. We're here. Like thumb up. You know how you can like exit the application? Thumb up, exit the application, and come back. There we go. Power down, power up. That's what works every time. So I wish I've come across as a tech genius and I don't know anything. That's the only thing I do. There he is. We'll get him up here. We got you coming. That was the quickest, easiest, most succinct way to do it, Michael. By the way, I could tell you just like exited out of the app. So sending you the speaker tag. And then who's not? Smurf is unmuted. I can hear you breathing, bro.
You want me to mute Kit? My bad, bro.
I mean, I don't want to hear you. I don't want to hear your deep breaths in the microphone, bro.
My fault, bro.
You sound like Darth Vader. Anyway, Michael, I'm trying to bring you up here, buddy. We'll get it.
I sent him the invite.
Yeah, so did I. Oh, there it is. Yes, sir.
Yes.
Right now, so I'm going to try to walk you guys through it. We're limiting our focus to 9:30 to 10:30 a.m. just for the purposes of saying this is where we're going to be looking for first presented order block. The first down close candle formed at 9:35 on a day that we opened up with a premium gap opening. So that means we're likely going to draw down into half gap. We look for it to get to that level 70% of the time by 10 a.m. The down close candle that formed at 9:35 becomes a validated bullish order block because the next candle at 9:36 price trades above the opening price of 9:35. I don't care that it traded up and closed high. I don't care about that. This could have went up above 9:35's opening price and traded lower. It becomes a valid order block. It does not mean that price when it goes back when higher on 9:37, and then 9:38 had a slightly lower high, and then 9:39 we traded down below the order block's low. What did I tell you earlier? When it forms, when you are looking at these things, they give you information. Now, it goes below that low on a day that we're looking for prices to go where? Lower. Price rallies up, takes out the short-term high at 9:37. That short-term high is violated and taken out on candlestick 9:43 a.m. Then price works lower aggressively. It takes out the sell side right below candlestick 9:39 on a 1-minute chart for NQ mini contract for September delivery, not micro. That same 9:35 candle, highlight that entire range from high to low using the wicks. That means you got the entire body. Drag that out to the right. You'll see that after it creates the high, it creates the bearish breaker, okay? On candlestick, why can't I see it? 9:50 macro time starts. It opens below it and bangs up into it. There's your short for first presented fair value gap. I'm sorry, first presented bearish, which is an inversion of that bullish order block, because every aspect of a valid PD array has an inversion aspect to it. If it's going to go lower, should that order block see more than half of it traded through on the upside? No. There's a valid utilization of what you were describing, but wasn't framing it in the right way, where you got to limit time. Say, this is my whole entire canvas. This is the playing field. This is goalpost to goalpost, 9:30 to 10:30. You got 1 hour to find it. The very first one forms, then you have the aspect of knowing where's the bias, where's it likely to draw to. If it validates, it need not act as a bullish order block to send price higher. Do you understand that?
Yeah, I mean, I'm blown away.
See, it's like I'm telling you, I'm just making it up as I go. It's amazing how it keeps working, isn't it?
That you want to hear something funny? That's not even
Go ahead.
like all this time I thought I was doing the like I pretty much trade market maker models. That's like the framework that I use, but I look for I thought the first, like where the market structure shift happens after we run into a high, I thought that was the first presented order block, like that change in the state of delivery that takes out those series of candles, like that,
Mm-hmm.
like at 9:49 you got that market structure shift, like that little wick under that swing low. I thought that those candles leading up to it was the first presented
Well, that's the
order
first
block.
presented breaker. That's the break. That's a breaker, right?
Yeah, yeah. If you were a
First
breaker
presented
trader and you're
breaker.
using first presented, that's what that is. Yeah.
But you just put me onto something that's yeah. All right. I'm yo, Kit, appreciate you. I'm good on that. Thank you, Michael.
You're very welcome. Good question.
Ooh, that was a great question. I really like
Isn't
that.
it delicious?
What's that?
Isn't it delicious?
It is. And watching Smurf's like mind kind of blow, like I can just picture. He's like, again, I utilize like a pimple on a fat kid's face, but like his mind just like, boo, wow. And hopefully he's not the only one. That was great though, Smurf. I loved your reaction real time. I could just visualize it in my head. So that was beautiful. Um, great question. I'm not, we've got a lot of things to try and organize these questions. I'm just going to freestyle it today. I'm going to bring up someone I haven't brought up yet. I mean, we do have folks, fam. I do want to bring up my boy Manos Market Oracle, but I also want to give folks who have never been up an opportunity to ask a question, to have a conversation with Michael. So I'm picking a random person and fingers crossed, we're still going to have a good question, right? So bringing up someone. All right, let's see. Metalhead 711. I think Mike 7 is up. Metalhead 711. I like the name, Mike. We'll see if he comes on. Andy's got a kitty cat as his profile, which I like cats. So, Mike, are you there, buddy? I can't hear you, bud.
12:45 is our cutoff extraction time.
Yes, sir. Yes, sir. Sounds great. Mike, are you there? One more time, buddy. I don't mean to. If you have a Bluetooth in, take it out.
Hi.
You're breaking up on me, buddy. Patiently waiting. It's going to
Hello,
be tough, my friend.
you hear me, guys?
Yes, go ahead. Try, bring it quickly. Let's go. No,
I did.
bro, we can't hear you. Check it.
Can you?
You check your bars, bro.
Allow him
Hello.
to send it to you in the comment
Absolutely,
section,
absolutely, Mike.
and
If you
then
yes,
we'll use you reading his question if it can be done that way. Otherwise, we'll have to move to the next one.
Well, the mic gate is open. I've just posted it in the comments in the purple pill. There's the link traderoundup.com/mic gate. If you click on that,
Hi.
you can submit your question. You can
Can you hear?
can you wait?
oh my goodness,
Wait
Mike,
a
are you there?
second, Mike.
He's struggling. He's struggling just to get on.
He
So
can't hear us.
I don't think he
Hello.
means to interrupt Pit much.
Uh,
It's not
Proceed.
it's not going to work, buddy. I'm sorry. Ask your question in the purple pill and I will, as Michael said, I will read it out loud to him. If you only have one bar and I bring you up, unfortunately that could be difficult. So, but we're trying and it is good to try and bring up new folks. So I look and see folks that are interested in coming up. We'll bring up Fast Kiko. Fast Kiko, you're up next. If you have a question for Michael, pretty please, the mic gate is there for you to ask the question. You can post a picture. It can all go there. It's also logged. And if you do that, that's going to give you preferential treatment for the next time because we're going to know
Yes,
who you are and what your question is. So
yes,
it is in your best interest, the listener, if you're here, to jump into the mic gate, ask your question so that we get it logged, so we know who you are, so that we can follow up and ask the question. We can review it and hopefully it's a good question and just high five and we can ask it to Michael and bring you up. So
yes.
it's
And if
it's
it's a technical question, please use the feature to upload your chart when you're asking the question in the mic gate.
thank you, Pit Munch. We just brought up geez, that this it's difficult. Where did he go? We'll bring up TJ.
Uh,
Kiko, there you are, Kiko.
Hello. I have a question. I struggle with my psychology with like trading. Like, I would enter a trade and I would lose on it, right? And
Hey
uh,
Kiko, do me a favor. Do you know
yes.
what the protocol is, brother? Tell us
No.
your name, where you're from.
Oh,
Tell
my
us
name
a
is.
little bit about or how long you've been trading and then how you engage with price, pretty please. And then follow up with your question.
Okay, sorry. My name is Gaspar. I'm from Georgia. I do landscaping with my dad.
Very cool.
The
How old are
way
you, buddy?
I'm 21.
21.
I've been trading for 2 years alone. Um, so the way I trade price is I like to look for a high time frame, like PDRA. And then I usually like to simplify it by like entering on the discount or sometimes premium. Usually when it depends on how price is. Uh,
So your framework is premium and discount.
yes.
Okay.
And
What's your entry method? What do you use to enter?
the second time frames, I use internal liquidity and no, external and internal liquidity.
No, that's your logic. I'd say that's your
Uh,
logic is your IRL, ERL. What are you entering on? What's the entry point? Where are you getting in on, more or less? Is it a
order
fair
blocks and
value
rejection
gap?
blocks.
Is it at the extreme of a range? Is it on a key level?
Yeah, usually key levels, rejection blocks, and order blocks. Sometimes
Okay.
inverse fair value gaps.
Good answer. Great answer. Okay.
And I also use opening weeks, like opening weeks and periods day highs and lows.
Ooh, those are some
And
of my favorites.
yeah, I also I use the fib basically on like the higher time frame.
That's good. That's
Uh,
good. So
yeah,
the fib is your kind of a accountability partner. You're utilizing it in conjunction with your high time frame analysis.
yes. I use like higher time frames liquidity, like previous days, previous weeks lows and then highs. No, and like big reversals, something like that, like higher time frame PDAs basically.
Okay.
That's pretty much it.
Okay. How you've been trading? Have you? I mean, or would you consider yourself a break-even trader? Not yet,
Not
or pardon?
not yet,
Okay.
not yet. So I do make a lot of money, but then I lose it the same day. So I'm trying to figure out like what are things I can do, because I do work at the same time. Like I do landscaping and I trade at the same time, and I'll make like a few like 10,000 on a funded account, and like I'll blow it the next day because I'm not I don't think I'm not patient, or I think I revenge trade. Um, what else? I'll probably like I don't know. I wouldn't have time. But usually like I'll make a lot, and then I'll just like blow it the next day. So I'm like, it's like I have a couple like 20K payouts maybe, but it's like I get break even at the end of the day. So
So it
overall, I
sounds
break
like you're a
even.
lottery trader. You're a lot. I don't mean that to be disrespectful or trying to
No,
talk
that's
down to
okay.
you,
Yeah.
but that's the mentality, and we called ourselves that when we were trading outside of prop stuff in the beginning. When I'd get in other communities, and guys with more experience would be talking to people that less experience, and they'd say, "Look, you're trading the lottery again. You're trading it." And when you say you make lots of money and you blow it the next day, what you've entered is this loser's mentality where you're numb. You're just chasing the next win. You don't even realize that you're in this loop that keeps going. I mean, I guess you realize it now, in retrospect, but you don't realize you're in it when you're getting ready to take another trade because you want another big win or you're trying to get to a big payout or a payout. The only way you're going to fix that, and this is sincerity, okay? You need to lower what you're aiming for in terms of the money. You need the
Um,
money to be the least important thing and the consistency aspect the most important thing. So
mhm.
if it means you make $100 a day, once you make $100, stop trading, and you do it
Okay.
with a micro. And what you're going to do is you're going to kind of like desensitize yourself to the need to be right with lots of money,
Yeah.
to changing it to I'm consistently following a model and approach that is the minimums you can get, $100. If you make $100 every trading day, that's $2,000 a month. If you nail it and stop, don't go back in either. That's the other rule. You can't go back in. I have taught this. I have told this to students. They paid me behind a paywall when they had these same similar problems, and they never came back and showed me where they failed doing it because they went through that process. They got better by doing this. In other words, everyone that did it overcame the problem that you're describing. Everyone that did not come back and say, okay, here, Michael, here's the proof I did what you said. They never did that and failed. They never did that. The ones that did show the progress of what they went through, they always went to consistently profitable because they changed their mindset about having the big payout money. You're describing something. You said you make $10,000 in a day, and the next day you blow it.
Yeah.
That's unsustainable for someone that doesn't have consistency and a very disinterest for the outcome. Sorry about that. Give me a second here. The idea of pursuing another big win becomes so encompassing that nothing else is acceptable. So what you're doing is you're trying to become an Olympic trader. Gold medal is all you'll accept, and failure is not an option. And that's unsustainable. Like that's literally unsustainable. And if you haven't been trading for a long period of time, it's literally impossible. You'll get wins. You'll put money on the bottom line, but you'll throw it away chasing that same paradigm of I'm pursuing big money, I'm pursuing quick shortcuts, get to the money, because what you're trying to do is you're heavy-handed trading and you're trying to do it impulsively and you're doing it at work. So you're literally, please don't take this. I'm not beating you up because you're,
No, yeah. Go ahead. Go ahead.
but you're literally doing everything wrong. Like you're on the job. You're probably saying, man, if I can make this, and if I keep doing this, I ain't got to do this job no more. I could do all these other things. And what you're doing is you're cheerleading yourself with all the wrong things. When you should be cheerleading yourself saying, I don't want to have so much concern about the outcome of the trade because I need to prove that I'm consistent. I'm a rule rule-based idea trader, and I'm not going to be influenced by the money. Every single millionaire trader, every single one of them that has consistency, they don't just get it because they hit the hit the jackpot on a nice little run here and never was able to do it again. There's lots of those out there. You want to be able to be boring, consistent. You know your business model, you're going to implement it, and the money's not the motivator. The consistency and adhering to that model. And when you start by focusing on, I'm going to follow the model, I'm going to follow the process, and I'm going to just aim for the smallest amount. And $100 a day, you don't think this is going to be all that big because you probably take, like you said, you had a couple 20,000 payouts. Okay, that's good. That's good. Now the bug has bit you, but now you got to sober up and say, okay, I've tasted it. I know what it feels like to get that kind of money. So now how do I consistently get that money? You got to go all the way down to the quarter slots, not go to the roulette wheel and bet everything you brought to the casino, hoping you get the big payout. Go to the quarter slots, and you're not there to get a lot of money. You're there to desensitize yourself to the outcome. You're just there to, I'm following a model. This is the model. I put a quarter in, I push the button, it spins. I don't care about the outcome. And I'm just going to keep doing that until I no longer care about what happens on the outcome of the trade. But I'm not worried if I lose, and I'm not excited if I win. It's that little sweet spot. If you can dwell in that area, in that arena as a trader, there is no ceiling. There is no cap on how much you can make. It's literally a blank check. But everybody's focused on doing as fast as I can, get the big payout, because somehow in our mind we think that that's the end of it. We're going to get a big payout and we don't never have to do it again. But then you spend that money really quick, and you're like, man, I want to get another one of them. Or you love the way it feels, and you just can't imagine doing this because it doesn't feel like you should be bothered with it. And that's what prevents you from being consistent, because you're looking at it from the monetary side, not the consistency, not the, I'm following a model. I'm not worrying about the income that comes from the outside of the result of the trades, the transactions. That's not the importance. The importance is, are you just simply following the model, the rules? You're there in front of the charts when it forms, you engage, and you have zero emotion about it. That's what every trader should be striving for in the beginning. When you then know how to read price action consistently, and you're not impulsively chasing the next payout, you won't try to trade multiple times in a day. Let me ask you a question. Have you made money in trades that were handsome, and then while you were at work, or maybe it was a day off, you went back in and tried to trade and make more?
Um, that was like in my beginning years of trading, but usually when I make like 10K, 20K a day, I would stop completely and maybe trade the next day.
Did you do that the first time it happened, or you evolved into, when I make this much money, I'm not going to risk it anymore for the day?
I
Or was it
involved.
always okay? Yeah, so you had to go through this painful, experience saying, okay, I don't want to do that anymore. Well, you can find trades clearly, but then the money's clouding your mind. It's telling you to keep risk high. Do you use a stop loss?
Yes, I do. I do 500 stop.
Okay. How often are you trading per week?
Uh, 2 3 days per week.
So are you saying you're taking 2 to 3 trades or transactions per week?
Yeah. Well, actually, let's say I'm like today, I would take maybe 4 trades. So then tomorrow I don't trade it. Then Wednesday I'll take another maybe 2 4 trades, but then I lose it completely.
Okay. So
And then I just like tilt.
what?
Consecutive losses, Michael.
Okay.
I don't think he's really paying attention to that. I mean, I don't know. That's kind of what it sounds like. He's losing cons- consecutively, and it's taking from all of his gains.
I would like over tilt. So like say like okay, I need a certain amount today. So let's say I had like 20K for TPT, and I was gonna get a payout, and I lose like 6K. I tilt, and I start over ledgering, and then over trading, and I just lose the account completely. Like I don't know when to stop. Like I keep telling myself to like stop trading AG session because those are the days I lose most of my time, but I just can't. I don't know why.
Okay, well, you just really did me a great service because I was trying to fish out of you where you feel your problem areas are and have you recognized them? You have, but you haven't changed anything about them. You know a problem time of day that most of your losing trades are occurring, but yet you're saying you still can't change it and something happens. That's a lack of control and self-control, and you're being impulsive. And it's probably because in Asia, do you find yourself at home after work? And Asia's the time when you're not at work and you can follow price action more closely because you're not being distracted by your job?
Yes,
Okay.
that's that.
Well, now
And
now build this idea up in your mind. If I told you I'm not ICT, I'm just somebody that just tried to start trading the last year or so, and I tell you, listen, I got this job and I make okay kind of money, but I wanna leave it. I want to be a trader, and I've done some things and I've made some money, and sometimes I get real close to the payout, and then because it's so close, I just want to get it done and nail it down. I go in at the only time of the day where I'm not really working, so Asia's like it for me. But I've noticed every single time I go in there, it's hurting me. Um, what advice would you give me? Because you have more experience than me. Because I just started just recently. What advice would you give me?
um, I would say like maybe take days off work and trade during those days. Like maybe like 9:30s. Like take days off.
Do you recognize what you just did?
Yes.
What did you just do?
Told myself to take days off work and trade.
You're telling yourself, take away the guaranteed meal ticket income of your job to gamble, and you defended your own personal perspective of still trading the Asian session. Did you hear what you just did? Because that's what you just did.
Yes.
So your problem is impulsiveness and lack of course correction. That means you recognize that there's a problem here. It's like I'll borrow the analogy that my first mentors used. Larry Williams said, if you go down the first right hand turn after you leave your house and you walk down to this blue house and it has a white picket fence in the front and it has this really mean, vicious dog. And every time you walk by this fence and your arm's too close, it just tears your shirt apart, gets a hold of your skin, tears you open. Do you need to keep doing that 50 times before you realize there's a threat there?
No.
No, right. But you haven't got to that point yet to recognize the time of the day and the things that you're doing don't, for you yourself, you don't need course correction. And you've said, I don't know why, I just keep doing it. You do know why. You're telling yourself that if I keep doing it long enough, it's going to work for me, when it's already proven to you that this isn't the right thing for you to be doing right now. I'm not saying you can't eventually become a good trader during the Asian session, but right now you're fighting to prove it for yourself. And that's a problem. And we don't feel like it's a problem when we're doing it. You need to have some kind of intervention, someone outside of you, sit down with you and have a conversation. That's why I put myself in the situation where you could try to counsel me, giving you the same thing you just gave me, and you couldn't identify it, or you did, and you talked around it. So that means you're keeping that enabling aspect that causes your own defeat. You're doing that to yourself. It's a conscious decision that you keep making over and over and over again. And the first thing I would suggest to you is that you have to stop thinking like that, because how you're thinking is steering everything that you're doing in action or inaction. Go down in size, only trade 1 micro. Don't worry about getting a payout. Don't worry about that. Be consistent with 1 micro in a demo that you didn't pay for. Show me 30 days, come back in a month, okay? And or send it to me in a tweet directly. So here, you told me this on the 20th of July, 2026. Here I am, I'm back here 4 weeks or whatever later. Here's what my demo account looks like. Show me every transaction. Just record your screen on your phone and just go through the whole thing. And I better not see anything more than $100. And I better not see anything more than $50 as a loss. Because if you can do that and you're consistent about doing that rule-based idea, it's not about how much money you make. That's the beginning of you fixing a lot of the things that you have impulsively going on. And if you don't want to do this, I promise you what I'm going to say to you next is the absolute truth. And whether you believe it now, you will believe it later on. It'll probably be believing it when you quit trading altogether, because you just won't be able to do it at all. If you don't do this, you will never be consistently profitable. And I mean that 100%. I don't care who teaches you what, you have a reckless abandonment for what it is you're doing. And I was there before. I've done that stuff, and it's uncomfortable admitting it. It's uncomfortable sharing it with other people, but it's a very hard thing to overcome. But you have to recognize first what it is. And you did me a great service as someone that's counseling you, because you gave me the very things that you said that you identify. And you know that this is where you're losing money, and you just keep doing it. If you were married and you married someone that had a long-term relationship with another guy, and they work at the same place, and he's always still coming on to her, you're going to just let this go on and not have a conversation or intervene and say, look, we got to make a change here? No, you're going to make a change because you care about that relationship, defending it. Somehow you've twisted your logic up. Well, now you have this abusive relationship with your trades, with yourself, and you're defending your poor choices as the trader. You're not identifying the things that you need to correct and change. You're defending it and pretending it's not happening. And that's what a loser cycle does. It focuses on, well, I'm just not sticking to it long enough. And no, there's a time when you need to pull the plug on it and make some changes. And don't try to get these big payouts. Be consistent. And over time, let me say this and we'll end it. If you've done this exercise every single day, it's easy to make $100 a day. It's very, very easy trading micros to make $100 a day. And most people don't even realize that how much that would change everything on their financial landscape if they could just do that, let alone $10,000 payouts, $20,000 payouts. It's stressful getting there if you don't know what you're doing. You're gambling, but you're not gambling when you risk $50 to make $100 on a micro or two. You're not going to go broke. You're not going to lose the house doing that. But you're gaining a perception of reading price action, managing and mastering yourself in this process. And then by getting more experience, being responsible, aiming for the things that work best in your own hands, and doing this for 30 days is going to help highlight where that is. And it'll also highlight some deficiencies where you have in your personal characteristic as a human, as a man, and then as a trader. And you have to be honest, and you got to be able to, and I'm not saying you haven't been honest, you've been terribly honest to the degree where most men wouldn't admit what you've admitted to. And that's very commendable. That's the first step to you correcting all these things. Because I have so many students around the world that simply tell me they do everything right, and obviously they're not. And I commend you with your willingness to come up and say what you said. But after 30 days, what you're going to have is you're going to have a baseline. And that 30-day, 1 month experience of spending time doing the least, it's going to be hard. You're going to be like, man, I need to do something extra than this. Some days it's going to feel too easy, but you're not supposed to feel like it's too easy. That's the whole part of it. You don't want to feel like it's easy. You don't want to feel like it's hard. You don't want to look at the money and say, I only made this many transactions, 30. That's the most you can do. And here it is. This is all I made. You don't want to look at that either. You want to look at how you felt going through it after the full week. 5 days, 5 trades. That's it. If you lost, you lost. You got to wait till the next day. Reset. 1 trade. Risk $50 to make $100. As soon as you get your limit order hit at $100, you stop. You don't go back in and see what else you can do. You don't look at my videos. You don't look at anybody else's stuff. You don't talk to other traders. You completely isolate yourself. You're not going to want to do it. You're probably already talking to yourself, ain't no way I'm going to deal with this stuff. But I promise you, if you do it, the perspective you gain, the visibility that you gain by doing it, it changes you. And it makes you process-oriented, detail-oriented. It makes you much more responsible in your own hands. Nobody else can help you. No one else can make you do these things, but you have to identify doing these types of things. This corrects me. And then for another 30 days, then do it with one mini contract. So if you're trying to make $100 with a micro, shoot for $500 to $1,000 on a mini. One mini, not more, just one. And whenever you get that result, stop. If you lose, don't go back in. Don't try to fix the error. You're totally desensitizing yourself to the outcome, but you're just following the rule-based ideas that you're using to get into the trade. I don't know what your rule-based ideas are. I don't know what your model is going to be, but whatever it is, it needs to be the same thing. And it could be simply flipping a quarter. You're going to go long because it went heads. You're going to go short because it went tails. It doesn't matter what the model is. What we're trying to identify is you sticking to rules and limiting yourself to, okay, this is all I can do and there's nothing else. I promise you, man, I'm telling you, it doesn't seem like it's the way it is, but every multimillionaire that's made their money in trading, their trading is boring. It is so boring. It's not exciting. It's not sexy. It's just business. It's just business, man. And you got to go by the numbers. And if you don't really know what your numbers are, where you go off the rails, how to stay on the rails, you're just gambling. You're taking shots in the dark, and maybe you might hit something once in a while. People win the lottery all the time, but not a lot of people win the lottery every week. And people without a model, without any discipline, that's what you're trying to do, and that's unsustainable, and it's not realistic.
Where did he go? I think he fell off. Wow. I mean, one-on-one mentorship here, trader roundup, 12:28. We've got another 15 minutes. That young man just got invaluable advice and he got it one-on-one, and that's beautiful. So I think he fell off, unfortunately. So we will keep the conversation going, keep it flowing. We got 17 more minutes. Say hi quickly, Manos. How you doing, buddy?
Hey, what's up, guys?
Not much, man. Wasn't sure if you had a question, maybe, if you wanted to comment at all.
I did actually. First, I want to thank Smurf because you just opened up a whole new section of PD arrays for me. First presented anything, but besides that, I had a question about the gaps. When you grade the gaps, Michael, when I get the suspension blocks when there's a gap, just like any regular fair value gap. If there's a gap volume imbalance, you include it, but if it's an overlapping volume imbalance, you don't. Do you have anything where you do actually include those overlapping volume imbalances instead of them being gaps? Or is it just gaps that you have to include in the gap itself?
If I'm honest, I have no idea what you just asked me.
Yeah,
Uh,
I'm not sure I understood either, Manos.
All right, so you know how you have any fair value gap, right? You're gonna go, it's three candles. Candle one, candle two is the gap, candle three, because candle one and three's wicks didn't meet, right? So you have your fair value gap. Now, if you have a volume imbalance connected to those gaps, which is what you call your suspension block. If you have a volume imbalance on both candles, the top section and the bottom section, that would be your suspension block, right?
correct.
Now, if you have overlapping volume imbalances instead of them being gapped, you don't include those. I know you don't include them in the fair value gaps.
That's where I'm having a disconnect. I'm not sure what you mean when you say when they're overlapping and they're gapped. What do you
All
mean
right,
by that?
for example, if you go to the daily today we yesterday, Thursday closed. It
Are we
closes
looking at
at.
NQ?
We're looking at NQ. Yeah,
Okay, so
Thursday
daily.
closed at 29,179, and then Friday opens at 29,191. So the gap was up. It wasn't a gap down. You understand? It was like it gapped up for the little end dog. It's a gap up instead of a gap down. Now the suspension block would be if it gapped down on both Wednesday's candle into Thursday, and then Thursday into Friday. And that whole entire fair value gap, along with the two gaps, would be your suspension block. But in this case, both Thursday's candle gapped up a little bit, and then so did Friday's candle gapped up a little bit. And you still got that fair value gap, but instead of a suspension block, it's the other way around. You with me?
I'm trying to get TradingView to get this chart to open up for me. Every time I try to pull it up, it just sits there and gives me that little broken ghost icon. Hold on 1 second. I'm on the daily chart. I'm on NASDAQ, September futures. I'm on a mini contract, not micro. And I don't have the settlement tab highlighted. And I'm looking at today's candlestick, and you're talking about last Thursday and Friday?
Forget about today's candlestick. Let's just go for the last three down candles.
Okay, I
It's
got you.
Friday, Thursday, and Wednesday. So Wednesday closed. Thursday opens up with a tiny gap up, right? That's your new day opening gap, and it gapped upwards because Wednesday closed at 707.5, and then Thursday opens at 709. So you got 8 ticks of a gap up, right? But your fair value gap is technically going to start from the wick because you're not including that gap up. So you're going to use the wick, which is the low at 29,397, Wednesday's low, with Friday's high. That's your fair value gap, right? But because we gapped up, if it was a gap down on Thursday and another gap down on Friday, you'd be using it from the closing price of Wednesday to the opening price of Friday, right? That would be a suspension block. But in this case, it's opposite. So we just have the fair value gap that's from wick to wick because both gaps are up. You understand what I'm saying?
Well, I mean, you have to also incorporate that on Wednesday you have your big discount wick, the wick on the bottom of the candle. So you have
Yes,
that,
sir.
you have to grade that. Then you can grade between Wednesday's low on the wick and Friday's high. And then you have the wick over here on July 8th. So I'm not certain what you're asking me in regards to the fair value gap or imbalances or the grading of it. Like, are you asking very hard, fast rules for what just happened just for Wednesday, Thursday, Friday, or how I would do it?
Well, specifically, I mean, how you would do it, the way you grade your suspension blocks, like I said, it's with the volume and balance of a gap. But if it, you know how you have the two volume imbalances, one is either going to give you a space between candles or one is going to be an overlapping volume imbalance. You understand what I'm saying? Like with the overlapping
Bro,
volume
I don't
imbalance,
understand what you're
Yeah,
saying, Monos.
that's the part. That's the overlapping gap. Like that.
it's all right. An even more clear example would be we have
Can you post a picture, mate?
yeah, hold on. I'm gonna do that right
Just
now.
post a picture and we'll put it in the purple pill. I hate to say this, but I'm totally lost. Typically, I have a decent visual. I'm
Did
looking
you
at
hear
the
me?
chart. I can hear you, mate.
Hello.
Hello. Yes, we can hear you. Yes. Yeah, we can
Yeah,
hear you.
yeah, we hear you, Frank.
Put the thumbs up, guys. You can hear
I hear
them.
no one talking to me, so
Okay. Shh.
it's wonderful.
We hear you.
We can hear
Yeah,
you.
we lost him.
X is undefeated, guys. That's all I can tell you. I mean, I'm pretty sure we lost Michael. He can't hear us. So,
Can you guys hear me?
yes, put the thumbs up, everybody. Thumbs up, everybody. Let's go. Show them. Show them we can hear.
All right. Listen. Here's what's going on. I can now hear you talking, but I can't hear myself talking. There's a long delay again.
Same thing, power down, power up, brother. I mean, I know we're wrapping up here.
There's a long delay.
Ugh.
Now I hear myself, but there's a long delay. I don't want to do that. So I was just, let's do this. The gentleman that was asking about.
Somehow he just fell off.
Yeah, I lost him again.
Wow. X undefeated today, boys and girls. Here, I'll try and bring you back up. Send the invite tag too. For whatever reason, he can't receive my invite tab pip much, but he can get
I'm looking for
yours.
him. I see him. No, he disappeared.
No, he's there.
Let me try to find him.
And in the meantime, Manos, you're just posting the picture, right?
Yeah, I just finished screenshotting it. It's going in there right now.
Rock on. We're just multitasking here. That way we get through this.
Okay, I send him the invite. Hope he gets it. Let me send the other one. Okay, let's see if he comes up.
You guys can still hear me?
Yes, sir.
Yes.
Yeah, so I just posted the pic. And if you want me to explain it to you real quick,
Well,
Kit.
hold up. He's here.
All
He's
right,
here,
bro.
and with all the time and energy we've spent, I definitely want to go over this for sure. Okay, so candle relevant candlestick stalker just posted something. If you go to most recent in the purple pill, he's looking at a volume gap from 1800 on the low time frame. There's Michael. Are you there?
I see him, but as a listener, so I'm gonna check the tags
Here,
again.
I just
I'm gonna see if I can send it again.
hopefully here he is. Here he is.
Oh, okay.
Michael.
Yeah, he has a speaker tag now.
Yeah, he has a speaker tag now, and the picture from Manos is in the purple pill.
Michael, can you hear us?
He has, for me, he has the speaker tag.
For me as well. I'm just gonna send him a co-host as well.
I mean,
Just
I've tried to send him that plenty of times, but
no, right now there's nothing left to send.
That's a bummer.
Kid, are you still here?
yeah, I'm here. I'm
Okay.
just sending tags and trying to manage what's happening. I mean, it's anticlimactic to try to resume a conversation without Michael because he was in the middle of thought. So, oh, well, okay.
He lost the tag.
All right, let's see. Michael.
Yeah, I think they fucking with us today, man.
Oh man.
Pippi, I just brought you up. Are you there? Just see if you can if you can talk. Let me just see if the act of.
Yeah, you hear me?
Yeah, I can hear you, bro. All right. So
So I posted a picture too, um, and Mono said exactly to the picture I posted. What he's saying is for the suspension block, how you have a volume imbalance, fair value gap, volume imbalance. But for this specific example, the bodies overlap where there's no wicks in between. So he's asking, does that make a suspension block as well? Like if you look at the top, the one on top, that volume imbalance, right? Would you classify that as a suspension block as well? Because if you look at the bottom one, is separated with the wick, but the top one, it's separated with the body. So you have that gap up. So you have the close and then you have the gap up and then it trades lower. So there's no wick there. I believe that's what he's asking.
Yeah, exactly. Like it's not a suspension block, but the volume imbalances are gapped. These particular volume imbalances are overlapped, just like an
Right.
engulf. It doesn't have to be a gap, open gap. It could be an overlapping gap, just like in my example, those two purple lines. That's because where we closed, the next candle opened higher and then traded down, and then that candle closed. The following candle trade opened higher and traded down. So it's almost like not a suspension block, call it a compression block, you may, whatever you want to name it, but it's basically just reversed volume imbalances. Instead of gapping up, instead of gapping down, they overlapped up. That's and I just want to know if it has the same type of precedence as a suspension block or same idea. If
Can you
not,
guys hear me?
yeah, we can hear you, bro.
I
Fuck's sake, man. Did you guys hear me?
Yeah, now we
Yes,
can.
yeah, you're back.
yep.
Oh,
do that.
this is pissing me
I
off,
know,
man. What the
bro.
hell?
Yeah.
Man, good thing I'm making money with this shit, right?
Good thing we're billing by the hour, huh, bud?
Yeah. All right, so I was able to hear you. There was a strong delay. Like I had to wait like 10, 15 seconds before I could hear myself or whatever you guys were saying. I could hear you responding to me, but it was such a long delay, and I don't know what's going on. But if I can articulate what I think your question was before I respond. We're looking at Thursday's opening price. It opens higher than Wednesday's closing price. Are you asking, would you include that relationship between the higher opening on Thursday with the close that is lower than Thursday's opening price on a daily chart for NQ, September delivery contract? Would I include that by measuring or grading the fair value gap that would be made with Friday, Thursday, Wednesday's candles?
Exactly.
Yes, because you're using what price action? Open. The open's the most important price action you're going to have. What do we do after the open? So there's a small, it's not a suspension block. It's not a suspension, but suspension block is visually seen by having no bodies touching. Like for instance, if it's a series of down close candles like this, the suspension block would have Thursday's opening price be lower than that of the close of Wednesday. And then it would have to have a suspension block with a open on Friday that's lower than the close of Thursday's candle. That would be a suspension block, but this is not a suspension block. It's just, and I don't have a name. I don't have a name for that. It's just that you're going to go right to the opening price because that's the true range of what you're looking for Thursday. And you got to blend that with the wick that I mentioned. If you heard me on Wednesday's discount wick, that has to be graded. And then when we worked lower, you have to use the 8th Wednesday, July 8th discount wick and grade that as well. So it's not just, I mean, it's like I said, it's not an easy market environment that we're in. Very complex, a lot of stuff that you have to sort through and weigh out. But by anchoring it to the opening on Thursday and dragging it down to Friday's high, that would be a way of getting a grading or measuring where those key levels would be. And any PD arrays that would lay against those quadrants or octants would be sufficient or significant.
Perfect. That's exactly what I was asking. Thank you, Michael.
You're very
Thank you.
welcome. I appreciate your patience. This fucking app, man.
I know it's been all day like that. I feel like the
It's
minute
actually it was
they
a
knew
really
that
good
you were going to
question.
jump on, they were
Yeah,
gonna fuck with us.
yeah. So anyway, we're at that
Yeah, we
time,
are.
Kit. It's got. I'm not sure if you got anything out of this today. I was in the mood to talk. My wife was out of the house when the dogs barked. She came back, so she just gave me the how much longer look. So we're at that time. I don't know when we'll do it again, but if I didn't get your question, you can send it to me on X and copy Kit's handle too. So that way he has information that you can make available to the rest of the community because it might slip through. Sometimes I'm replying to posts that other people make, and I find that they don't get to them. And
And
sometimes I post stuff.
I'm sorry.
Go ahead. I'm sorry. No, I'm sorry.
Uh,
Go ahead.
Yeah, I wanted to add something. We have actual questions in the mic gate, and people have posted the charts. To them, I want to say I'm going to log those questions so that they are not lost, and I'm going to save them so we can bring you up next time with your question and your chart.
What are you talking about? Because I have no idea what you're referring to.
Well, Michael,
Oh,
what we've done, just so you understand, is we've created on the Trader Roundup website, we've created what's called a mic gate. And the same way that there's the purple pill, folks can actually go to the website, they can ask their question. And it's a way for us to screen and to try to ensure that we have high quality content for when you're here. So we not having just some random person come up and ask, what's better, 8:30 or 9:30, but something a little bit more intelligent. So we've created this mic gate, and it's very specific for our podcast, and it is for the listener to be able to inquire and ask their question. So we now have, I think, 9 very good questions that are on our website that would matriculate into the conversation that we have when we have more time, and or the equivalent of being placed in the purple pill. So it's just a way for us to organize things a little bit more, Michael.
Could you link it like
It,
post it in
it,
the
it,
purple pill
it
and
is
the
linked. It
link?
is linked. I think if you go to Pit Munch's um, link right there,
page.
there's a traderroundup.com/Mike Gate. And anyway,
Yeah, we also figured out a way to let you find charts when they post them more easy so that you don't have to go digging through the comments and then not finding them. But we're at the time that you have to go, so we're gonna have to leave that for the next time. But we did some work to make it all easier and organized.
and Michael, just go ahead and if you get a chance, we'll put together a little email and a little orientation so it'll be easier for next time and for folks. It's all in the vein of just trying to help make this easier, more organized, and maintain some type of quality within our content. And we don't want to waste your time at all. So that's what we're
I'm
trying to
I'm
do.
scroll I'm scrolling back. I hit recent on the purple pill, and 14 minutes ago, the highest on the list is LB Trading. I know what he is saying. That's what I don't see any links.
Yeah, that's why we are organizing this so that you don't have to do this when people post a chart and go through all those comments. We have it organized in a better way. But like Kit said, we're just gonna make a little email, not too long, but then you can just see for yourself and what it is and how we're gonna organize it next time.
Okay. Well, if we could when we get together, can we do a few of those before we even ask anybody new? Because
Absolutely.
it,
Yes,
Absolutely.
yes.
That'll be the
So
priority, is to bring up.
and I'll leave it to you guys to say, okay, here's where we're at in the list, and just toss 3 or 4 of them. I'll open it up with that, and then fresh ideas or concerns or questions can come after that. That
yes,
way,
and that's
because if they're sitting in here and they're trying to have a moment where they're going to ask their question, it's frustrating. It's frustrating for us having to deal with all this technical side of it. But imagine them; they're like I have a question, and they don't have any way of answering me because I can't be recognized. And it's not because we don't want to. I certainly want to answer your questions, but we're also juggling a lot of shit here today, and apparently he wasn't trying to work with us, technical wise. But I want to answer your questions. I want to let you realize and recognize that as an educator, I want to hear what your question is because it makes me better as a teacher. Because it may be like today we had some really good questions. Okay, they were really good questions, and maybe you thought about those same things and you just never had an opportunity to come up here to ask or maybe feel comfortable doing so. But maybe you got an answer to somebody else's question. And it's like that's the kind of community vibe I'm hoping you guys have from this, and not be frustrated because you didn't get your question answered.
Yes, and that's what I was saying, that the people that already have submitted the questions in the chart on the website, but didn't get into the space today, that I'm going to review and log those questions. So to your requests, that's what we're going to do. So next time we can open with that.
Yeah, I think that's fair, and it's reasonable. If anybody didn't get their question answered today, at least by opening up and before allowing anybody else and then skipping them, by default, it's at least the best way it can be handled. I can't imagine anything better than that. Or fair, let's put it that way.
I love it. And that's what it's kind of that's our intention in trying to make this more organized and again increase the quality and not waste anyone's time. And hopefully the listener understands we have had some tech difficulties today. We got through a lot of very, very good questions, and we're at the end of today's episode of Trader Roundup. So thank you, Michael, for being here. Thank you, Pit Munch. Thank you, Manos. Thank you, all speakers. Thank you, all questions that were asked. And, as the host, I'll just say until next time. So thanks, everybody.
Take care, be safe.
Bye.
Bye.